Do you want to know what's happening in the Houston real estate market? Check out this video for the latest data. Hello, my friends. Katie Day with the MOVEMETOTX Team with Real Broker here in Houston, Texas. This week, we're breaking down what happened here in Houston for the month of January and how that impacts you if you're thinking about buying or selling in 2022 or beyond. So the Houston Association of Realtors, or HAR, just came out with the most recent market update with January stats, and the year certainly started out strong. We saw a 7.1% increase in single-family homes sold, with 6,451 properties sell this past month versus 6,024 sell in January 2021. Something that is slightly surprising is that homes priced from $1 million and above drew the greatest sales volume increase for the month, registering a 52.2% year-over-year gain. The $500K to $1 million housing segment also came in pretty high at a 47.1% increase. While this is historically a slightly slower market segment in Houston, we are seeing lots of activity in this price point. Part of this, in my opinion, are out-of-state buyers coming in from Tennessee, California, New York, Illinois, among other states where cost of living and home prices are generally higher than they are here. We're also seeing a lot of buyers sell their home and move up to a more expensive home or their dream home. All right, let's talk about money. Total dollar volume, or the amount of sales, increased by about 28.1%, $2.27 billion in January of last year to $2.9 billion in January of this year. We saw an increase of 16.2% in the average sales price, seeing a jump from $325,000 to $377,738 this year. We also saw an uptick of 17.9% for the median sales price, from $263,000 last year to $310,000 this year. I don't foresee this changing significantly as the year goes on. From where we're sitting as far as inventory goes, or the amount of properties that are on the market, demand is going to continue to drive up prices as the year goes on this year. As interest rates tick up, I think buyer demand will slow some, but I don't think that it will impact price appreciation in any significant way. So if you're a buyer waiting for lower prices or waiting for the market to crash, I think that's going to bite you in the butt as the year goes on, because prices are going to continue to tick up and appreciate, and interest rates are also going to go up. And as those two things happen, that's going to really impact and really diminish your purchasing power as the year goes on. As far as inventory and what's on the market, most sources look at inventory on a year-over-year basis. While this does make sense, we've seen such a significant decline in inventory from like 2019's normal numbers to now. So I like to take a look at the past few years on a year-over-year basis. So in January, we had about 16,096 active listings on the market. This is 15.17% less than 2021, when we had 18,975 active listings on the market. And it's 45% less than 2019 and 2020, when we had about 29,000 listings on the market. We sometimes will look at inventory on a months of inventory basis as well. So what this means is if homes continue to sell at the pace that they've been selling, but no more homes come on the market, when would we run out of homes? So nationally, we're sitting at a 1.8 months of inventory. So in Houston, today, we're sitting at 1.4 months of inventory, which is down 0.3 months from last year when we were sitting at 1.7 months of inventory. So when we compare this to the other major cities in Texas, Austin's sitting at 0.3 to 0.4 months of inventory, aka weeks of inventory. Dallas is at about 1.28 months of inventory, and San Antonio is at 1.8 months of inventory. So we've got more relative inventory than Austin and Dallas, but a little bit less inventory than San Antonio. Just some additional food for thought if you're thinking about moving to the state. Okay, how quickly are properties selling? The median days on market for January was 17 days, down from 24 in January of last year, and down from 57 in January 2020 and 52 in January 2019. This is in line or very close to the last quarter of 2021, when we saw the median days on market teeter between like 15 and 16 days in October, November, December of last year. So by the data, we've established that more properties are selling than ever before. They're selling at higher prices than we saw last year, and they're also selling pretty quickly. We also know that many buyers are facing multiple offer situations, and they may need to submit offers on a few different properties before they actually go under contract and get an offer accepted for them to buy their new home. So it's certainly been an interesting 2+ years in real estate here in Houston and really nationwide. Basically, in 2020 and 2021, we've seen significant price appreciation and some of the lowest amounts of inventory that we've seen ever before. I would still argue that the opportunity has never been better for buyers. Over the past few years, we have had historically low interest rates, and that's allowed buyers to take advantage of locking in at a low monthly payment. And also, despite having some of the lowest inventory levels that we've ever seen, we are still seeing more properties sell than ever before. It was a record year in 2021. So buyers are still getting into homes. You probably hear a lot of realtors saying like, the market's super hot, there are no homes for sale, oh my God, But think about this, the numbers show that with the right relationships and market knowledge, there are still buyers that are purchasing homes, and honestly, more buyers than ever before. Last thing, so while it's always difficult to know exactly where mortgage rates go, if you haven't heard this before, I think that this is helpful information if you are looking to buy a home this year. One indicator of where interest rates may head is by looking at the 50-year history of both the 10-year Treasury yield and then mortgage rates. So understanding the mechanics of the Treasury yield isn't necessarily as important as knowing that there's a correlation between the 10-year Treasury yield, how it moves, and then how mortgage rates follow. So if we look at the past 50 years, the 10-year Treasury yield and the 30-year fixed mortgage rates run up and down in tandem, and we're definitely seeing that in 2022. As the Treasury yield rates start to climb, rates also go up. So even where we sit today with interest rates starting to tick up, we're still at lower mortgage interest rates than we saw in the 90s, 80s, 70s, and previous years, right? I purchased my first home at a 4.25% interest rate, and my monthly payment was less than what I was paying for rent at the time. So keep this in mind if you're thinking about buying as interest rates tick up this year. Another thing is, as we're seeing rapid price appreciation, it's a great opportunity as a buyer to lock in today or lock in sooner for that monthly mortgage payment and amount so that you can have that fixed monthly payment for years to come. So I know that this was a ton of information. If you're thinking about buying or selling in 2022 or beyond, please reach out as our team would love to help and chat. I'll put a QR code on the screen to where you can go to our website and fill out an inquiry form, and we'll set up a consult with you to talk about what your real estate goals are and then how our team can help you to achieve them. But hope you're having a great day. Thanks for watching, and I'll talk to you soon.